if you're on Facebook, to click like and then to share this with your friends and loved ones that follow you on Facebook so they have a chance to see this. We have a special treat with us here today. My guest today is Michael Turner, Regional Vice President with American Century, and I'm going to talk about him here in just a quick second. Our Community Cafe group is made up of myself, Mark Roberts, and I'm owner of Affinity Asset Management. We got Glenn Stockton of Stockton and Stern Law Firm and Chris Toman of First Option Bank. Those two guys have the week off, and I get to be on here today hosting and interviewing Michael Turner with American Century. So Michael, thank you so much for joining us here today.
Mark, it's an honor and a privilege to be here. Thank you so much for including me in this community cafe concept. I think it's really cool.
Well, excellent. Thank you. So for those of you watching this video, Michael and I, we go a ways back. I've been in the industry for a long time and have known Michael for a long time. And Michael's been very instrumental to us when it comes to getting information from analysts and economists from American Century. And then he turns around and shares that back with us in layman's terms so that we can understand it from our perspective and be able to turn around and use that information to benefit our clients, as well as we've used Michael in many other ways in the past. And that's why it's a special treat for us here today, because many of our clients actually know Michael Turner. He's been on other events that we've done and spoken at. He is very popular. He's very hard to get in. And so it took some finagling of schedules to make this happen here. We wanted to shoot this here in early October, knowing that the election is coming up. So today's topic is going to be centered around how do the markets behave around election time, around debate time. What are some scenarios that could happen if one thing happens or another? So we'll get Michael's opinion and Century's kind of opinions on this and just kind of see where this is going to take us. So Michael, again, thank you so much for joining us here today.
Of course. And Mark, maybe just to expand on my role and background a little bit. This is year 13 for me at American Century, and my role at the firm is to cover institutional investors in the Midwest. That's bank trusts, financial advisors, and the like. And what continues to impress me about you and Affinity is the sense that you are so forthcoming and open to creating these educational platforms for clients. And I think COVID probably threw you a pretty big curveball. That curveball they hung, though, I think you hit it out of the park and pivoted to this virtual concept. So there's a ton of ingenuity and innovation. And at least in my time at American Century, what I find is that the advisory groups that create and provide educational platforms for clients typically have more well-informed clients, which translates into better decision-making and the potential for better outcomes. So again, I'm fired up to be a part of this community cafe. I actually did watch the real estate community cafe, and being a Kansas City native, I was shocked to hear the average selling price for some of the homes in Johnson County. I wish I could sell my house, but I think the issue would be where do I take the family at that point? And then the second thing that really kind of stuck with me was the inventory is like 1.4 months. I mean, that is remarkable as I kind of think back to the financial crisis and how things have evolved over the last 12 years.
Excellent. Good. I'm glad you watched that. We got a lot of folks that watch those. So, we're going to make sure that this is a coronavirus-free community cafe day. So Michael, let me start off. Let me hit you up with the first question. I know it's going to segue into lots of other questions, but what do you see as the potential market impact that if President Trump gets reelected versus if Biden takes over as president?
Okay, I'm going to do my best to take a bite out of that question. I mean, honestly, Mark, the timing of this year's presidential election, it truly feels monumentous, for lack of a better term. We're in the midst of a global pandemic. Social protests are perpetuating throughout the U.S. The selection of a certain candidate or political party, frankly, can result in significant changes to economic, social, and environmental policies that can potentially affect industries and market sectors. Now, let me caveat that with, our goal as investors is to put political beliefs aside and to best deal with the economic realities of the policies. We're quick to admit that presidential elections often lead to volatility in the markets. For those of you out there, we do have a blog post where we track volatility leading up to the election, it typically increases. Then at election date, it subsides and then normalizes about a year out. But making a bet on a political outcome can be difficult and, frankly, potentially costly. I mean, keep in mind, not only do you have to guess who's going to win the presidency, but you also have to correctly guess the House and Senate. And, one of the things that we think about, the question was, how does Trump or Biden affect the market? We try to reverse that essentially, or rearrange it, and not ask how the president affects or informs the market and economy, but how does the market and economy inform who's in the White House? Meaning, if Americans think they're getting a raw deal, they may want to see a change in leadership. I know your partners over at Schroders have a pretty interesting slide. If you wanted to pull that up, there's an index. It's called the misery index, and it is exactly how it sounds. It tracks how, frankly, miserable people are, and it's a function of two things. It adds in the unemployment rate and the inflation rate. And as the misery index creeps higher, that suggests the potential for change, and lower conversely. So the misery index, you're viewing a chart from Schroders that Mark and team pulled. It has correctly predicted the winner of the winner of 11 elections over the last 50 years. It only missed twice. It missed when Carter defeated Ford in '76, and when Clinton defeated Bush Sr. in '92. Mark, I think if folks on this who view this WebEx or this video are interested, you could probably supply that to them. Also, there's another piece from Fidelity, another partner of yours I know, and they really bring more historical context to whether a Democrat or a Republican is quote unquote better for the markets. And what Fidelity essentially found is that the first 2 years of any political term, average equity returns are slightly lower than the last 2 years. And that probably is just as the market essentially digests policy and whatnot. And then they break it down farther. Not only do they look at all elections, but if you look at the dark blue and the light blue charts, it dictates historically what's happened when a Republican's in office, when a Democrat's in office, when you have a Republican sweep, that's presidency, House, and Senate, a Democratic sweep, presidency, House, and Senate, and then a divide.
All right, so when it says divide here, when it says Republican divided Congress, that means it's a Republican president with a divided Congress. That's what that means, right?
Yeah, that's correct. And same for the Democrats. And really, there's not a ton of material difference. We think staying invested through these election cycles is kind of one of the most important things. I'm curious, though, there's a lot of colors on the screen right now. What questions are you getting from your client base, which I know has a lot of depth and breadth to it?
Well, let me go ahead and let me get this screen. Let me get this page off here real quick. There we go. I think a lot of fear. This is not a normal election year, is what we found. And not that any election year you can say is ever really normal, but President Trump kind of has the way to make things be a little less normal than any other particular presidential election. But then you throw on top of that the coronavirus and all things coronavirus and shutting down the economy and massive stimulus plan that was put out there. And it's not just the money from the stimulus, it's all the rules that go with the stimulus. And now they're talking about having another stimulus. It hasn't been passed, but they're talking about another round of stimulus, probably all will come before the election. I know I had clients that I was talking to after the first debate, and they were just kind of disgusted with both parties. And I kind of know how they lean, I think, on most of those clients, but it really doesn't matter. I mean, I think we're all just kind of disgusted how that debate went. And we've had folks that are just in kind of, let's just say, fear mode right now. I don't want to be invested. I don't want to be totally diversified. I'd rather be erring way more on the conservative side. I bet you 9 times out of 10, that's what the clients are telling us. And every once in a while, we'll have a client that, I don't mind being more diversified, but if I'm gonna follow your lead, I'd rather follow err on the side of caution, be more conservative. But I think right now, I think the coronavirus and the unknowns with a vaccine, and then you throw in a presidential election, it's a very unknown year, a very very crazy year.
Yeah, I can see that. I mean, when we look at, industry data, we see 401k balances are at, all-time highs. And, that's because people have worked another 12 years post financial crisis and their accounts have grown and, they don't have as much time to recoup losses. So that completely makes sense.
Well, Michael, let me hit you up with the next question I have here for you. With everything being said, what's the likely scenarios that's going to happen this year? Let's say election scenarios. That's what I mean. What's the likely election scenarios?
Yeah. Good question. There's many numerous different scenarios, but maybe I'll talk about three that we're really dialing into. And number one is President Trump wins the second term and Congress remains split between a Democratic House and a Republican Senate. Number two, it's a complete Democratic sweep, presidency, House, and Senate. And then number three, former VP Biden actually wins the presidency, but Republicans hold the Senate. So scenario one, what we're thinking is essentially just a continuation of what I would call the status quo. Scenario two, that would bring re-regulation, potentially higher corporate and individual taxes on higher income earners, and likely slightly more fiscal stimulus than scenario one, that status quo that I had referenced. And then, scenario three, changes to tax and spending policy are likely to be maybe muted by a GOP Senate. Really, no matter who's elected next year, the economy will likely still be in recovery mode, and fiscal policy, federal taxes, and spending are going to be one of the keys to economic growth.
So in these scenarios, well, what I noticed is there's not a scenario four where Biden wins and the Democrats take control of Congress. Is kind of, maybe that's not necessarily a high probability chance of that?
Yeah, so that would probably kind of fall under that scenario two a little bit more, where you have a Democratic sweep of the White House and Congress, and really the main differentiator
Yep.
there would be more stimulus than the other two alternatives, just to continue to soothe this economic recovery process that we've been in over the last couple of months.
All right. Yep. I'm sorry. You did say that. I was already thinking ahead on something else that I was thinking about with some client questions that have been asked of me lately. I would find that most clients, I think if I can try to read between the lines, they're less concerned about the presidency, and that's kind of hard to say that. They're more worried about Congress. And my comment is, we've seen over time a Republican president work just fine with a Democratic Congress, or a Democratic president working just fine with a Republican Congress. It's hard for any president to work with a divided Congress, just because it seems to be that there's more politics for the party and less politics for the people in this case. And right now, I think what we're going through is kind of a little bit of a typical example of that, where hasn't been the second round of stimulus because it's being held up in Congress because the Republicans and Democrats are not agreeing upon what that middle ground needs to be to negotiate to get that next round of stimulus out there for folks. So there's a lot of people, I think, right now that are just stressing over politics, and the election and the commercials kind of get ugly. The debates, well, the first debate was definitely ugly. Hopefully they'll be less ugly moving forward. But a lot of people are concerned for sure.
Yeah, everyone I think felt a little bit for Chris Wallace being the moderator of that one, a near impossible task. And you're right, Mark. I mean, the cross currents right now are incredibly powerful in DC, and it's tough to navigate. And in the asset management business, we don't work in certainties; it's more probabilities. So this is really along the lines that we think from a scenario perspective.
So, kind of bring up it's a serious note, but I'm going to kind of give it with a little bit of an interesting spin. Back in the day, I think it was back in the 1990s. I can't remember the exact year. Hanging dimple chads from down in Florida, and how the election results were being held up because of ballot paper not being hole punched all the way through mentality. So one of the things I noticed in the first debate was a pretty sizable portion of that debate talking about how one's going to contest it because the mail-in ballots, and how coronavirus is kind of wanting people to feel like they can't go in and vote because of safety reasons. They want to vote online or vote in mail. And then is the other one going to be accepting of that loss, or are they going to try to contest it? So what's your guys' views on the election being, the results being contested?
Yeah, I mentioned the term curveball earlier in regards to how you pivoted COVID-19, the novel coronavirus. It's really thrown a curveball into this election season. We're going to see far less in-person voting and likely far more paper ballots. And that poses challenges of the like that you've already referenced. And the way that this election season is shaping up is frankly, it may not be immediately determined who the victor is. And we could see a repeat of 2000 where they had to go recount Florida and it was a difference of a 500 and change votes. And frankly, the Supreme Court may need to get involved. And in this, it dovetails back to this comment I made about volatility. The market doesn't like uncertainty. Therefore, our expectation in this sort of a scenario is that short-term volatility would potentially increase. However, over long periods of time, begin to normalize after more certainty comes into the market. So we think for investors with maybe a longer time horizon, it frankly could present some potential opportunity.
Well, let me throw you a curveball question, something that you and I hadn't talked about previously here for today, and it's the idea of going through this election. If they have it contested, do you see the market being really volatile during that period of time afterwards? So I think the idea is if Biden gets elected, that's change, good change or bad change, it's change, and the stock market doesn't like change. So the stock market's probably going to react if he gets elected. But if it's contested, it's probably going to react pretty severely. Versus, let's say, Trump getting elected, good or bad, at least it's not changed. The stock market kind of favors no changes. But then let's say that's contested. How do you see the stock market necessarily behaving with people's reactions in the market for that?
Yeah, regardless of the election outcome, when we look back over past election cycles going back, multiple decades, we there is a historical uptick in the volatility, meaning how stocks are going to oscillate up and down and sideways while this information is digested. The market's very forward thinking. And so as these different scenarios which you've presented typically begin to play out, the market's going to react, maybe sharply, maybe not so sharply, depending on how much information is there. But as information then becomes more clear in the intermediate term, we should see a normalization. But our prescription is some short-term volatility due to the factors that you brought up.
So how about one other curveball that we also haven't talked about, and made me think about it as listen to you speak here. What do you think the chances of a scenario where Trump gets reelected, the Democrats take control of all of Congress, and then sometime next year, let's say, Congress is now going to try to re-impeach Trump like they did, I think it was in 2018 when they did that. They're going to try to re-impeach it now that they have enough votes with the Senate and the House of Representatives. Do you see that being a possible scenario that they'll go through?
Yeah, so that you bring up a really interesting point. If they tried it during the first term, there's the potential that they may try to do that if he is elected to a second term as well. And as they were going through the impeachment hearings, there was unknowns in the market, there was uncertainty. Risk assets oscillated quite a bit during that time frame. So that's a scenario that is plausible. I don't think we've assigned any specific probability to that exactly playing out, but it's certainly in the case of a potential reality that we would face over the next 4 years if in fact Mr. Trump was reelected.
So on taxes now, I feel like I'm firing lots of questions at you here, but I know you're the guy on this, so I appreciate it. How do you see taxes changing in the event of a Democratic sweep? So Biden gets in and the Democrats take control of the Senate. Can you maybe elaborate a little bit more? Because you talked about it earlier, but could you maybe elaborate a little bit more on tax changes that we could potentially expect?
Yeah, absolutely. That's a great question. It's something that's on every investor's mind as we go through and we speak to just the retail investors. And typically, when you have alignment in the presidency, the House, and the Senate, your policy agenda can get pushed through with less friction than if there is some other compilation of that. That being said, keep in mind we are in the midst of a global health crisis, and aggressively raising taxes may be something that would be difficult to do as the recovery still needs to find its footing. And so, that the tax policy changes, assuming the outcome that you just shared, it may not be a year one or a year two type of a policy adjustment. However, that is part of the plan with the Biden regime is raising corporate and individual taxes. And I know we're going to, probably hit that a little bit more because I want to get some more feedback on the questions that frankly you're facing on the front lines from your investors and clients.
I have had
Another thing I might, oh, go ahead, Mark, please.
I was just going to say, I have had a lot of clients go ahead and early do Roth conversions this year, where we typically do them toward the end of the year. Had clients do them a lot earlier this year, just when the market dropped, a good time to get more money into Roths, but they also are fearing taxes going up in general starting next year. Whether it's Trump or Biden, I think a lot of folks just, right, and I say it's an assumption, but it's a good assumption to think about taxes going up next year because with this much stimulus being put out there, I mean, we're going to have to eventually raise taxes to pay for all this. We know it's coming. You got to pay the piper, the next day.
Yeah, maybe I'll just on that kind of comment, I'll take a note and just sort of review what's transpired over the last 4 years, and then kind of talk about the future a little bit. So during the Trump administration, federal taxes on corporate and individual income and cap gains came down dramatically. Um, the president's spoken of further cuts in the second term, but if it's Trump in the White House and then a Democratic House, that could be pretty difficult to achieve. And frankly, given the current sort of fiscal backdrop, a more likely scenario, if Trump were to be reelected, would be a continuation of where we're at today. The contrast there is Biden, and I referenced this just a moment ago, but his proposal is to increase the corporate tax rate from 21% to 28%, and for individuals in the highest income bracket from 37% to almost 40%. That's can be a bit of a rounding error. For the higher income individuals, something that could hit a little bit harder with a potential Biden policy shift is the cap gains. Right now, they're taxed at 20%, and there's a proposal to take that up to almost 40%. So that would be a 100% increase in the capital gains tax, and that could have some.
Would you repeat that one more time? I think we had a small break up there. You think capital gains would go from 20 to what?
So in the Biden proposal, there are talks about raising the capital gains tax for those in the highest income bracket from 20% to 40%. And if that does go through, that could have some reverberations through the capital markets potentially.
That's a huge increase. I don't know in my 24-year career we've ever had capital gains brackets that high. I think I've seen it maybe as high as 25, maybe, but I don't know that I've ever seen anything north of 25%. That's crazy.
Yeah, there's a lot to unpack through his policy. Another thing, Mark, I might add, just because I know that the demographic you guys serve are folks that are retired. They need their capital to last. They need an income stream in retirement to meet whatever their goals might be. For the accumulators you're still working with, Biden's talked about rethinking retirement to promote more equality among different income levels. And this could potentially reduce the deduction for IRAs and 401ks, at least for those in the upper income bracket. And you made that point on Roth conversions. I think that's that's one of the biggest value adds that advisors help their clients think through are the tax implications and the quote unquote savings buckets of money to help them be successful in retirement. So a quick comment there.
Wow. Okay. So How about this? Anything else that you think you want to add regarding like just summary of key policy impacts between the two of them? Anything different that we haven't talked about yet?
Yeah, so I'll do my best to summarize this and and synthesize it in a way that's digestible. So from a Trump versus Biden perspective, if we just tranche it out and talk about taxes, we know with the Trump regime, there is the potential for no major changes in taxation. Whereas with the Biden regime, there is a proposal to increase the corporate tax rate from 21 to 28. I referenced how it would affect higher income earning individuals in the highest tax bracket from 37 to almost 40, and then the cap gains. The next tranche, federal spending. Again, Trump, no major changes. Biden would have a slightly bigger tilt potentially to increased focus on supporting this economic recovery as the economy begins to heal after we essentially shut the economy down due to the health crisis. Stock buybacks has been a pretty hot topic. I know in past interactions with your client base, I've gotten questions about that. There wouldn't be any major changes likely in a Trump regime from a buyback perspective, where Biden would potentially put limits on. Um, tech has been really the high flying sector. Not only did it do well during the economic downturn, but a lot of these secular trends really played out in the tech sector. There could be some antitrust focus with Trump being reelected for another 4. Much bigger, likely antitrust focus with Biden. And then from a regulatory perspective, Trump has run with this platform of deregulation. Biden would likely try to re-regulate. So that's a lot to think about and unpack right there. But at the highest level, that's how I would synthesize it into a palatable and digestible way for investors to think about the two uh, folks and their platforms.
So our clients are right now much more conservatively invested. That's by our choice. A lot of it's by clients' choice. We've given them the option to go more aggressive. They're wanting to stay more conservative, going through this whole process. Kind of let's get through what we call like the coronavirus cycle, whatever we want to call this cycle. Get through the election, get to the next stimulus, get through the next stimulus, and see what happens when we run out of money with stimulus, and kind of reevaluate from there on how we diversify. There's a lot of people that are on this, they're going to watch this video that are not clients of ours. And some of them are doing money management themselves, and some have other financial advisors. And I'm guessing they're probably like fully invested, fully diversified, that sort of stuff, and taking a different route from our clients that are taking a more conservative route. So from American Century's perspective, what do you think investors should be doing with their portfolios moving forward to this fall?
Yeah, I mean that's the $1 million question, and frankly, from an emotional perspective, it can be a good idea to talk to a financial advisor like yourself and really take your own personal bias and emotion out of the equation. And one of the things that we see too, it's this notion of recency bias in the sense that investors look at what's done really well in the short term history, and there's this propensity to kind of chase that performance. What we're finding anymore is the conversation is really shifting from did you outperform X, Y, or Z to are you on track to meet your goals in retirement? And it sounds like I'm being dodgy as far as that question goes. I mean, we think obviously diversification is important. We think exposure to the capital markets, both stocks and bonds, are incredibly important, not only in the election years, but non-election years and over cycles and through time. But really, the best prescription is getting a plan together, sticking to that plan, and not being sidetracked or by the noise that's going on in the short term from a macro perspective. Um, do you have any additional thoughts to kind of share on that last point? I know you're literally doing probably 8, 9, 10 Zoom meetings, reviews a day. I'm curious if there's any other fodder going on between you and your clients in that regard.
I think it's just right now, I think more people want to err on the side of caution, because they don't want to have another 2008 happen to them. And we still have things on the radar. And there's times, you know, in my career where I'm talking to clients, I'm doing reviews, and there's just not a lot of things on the radar, good or bad, ahead of us. It's just we're in a cycle, and there's just nothing major to talk about moving forward. And as you said, the market's forward thinking. But right now, we have a lot of things in front of us, whether it's the election, the various scenarios of the change of the election. We got stimulus, we got vaccine, we got coronavirus, we got impeachment, we have the stimulus running out, and how's everything going to be impacted next year with stimulus money finally being exhausted. A lot of companies went under throughout this whole process. So it's not just jobs lost, companies lost. There's gonna be a lot of people wanting to go back to work, and there's just less jobs for those people. This is a recipe of a lot of things that we have right now. So there's a lot on the radar, some good things, some bad things, and it kind of depends on the sequence of it. Does the good is offsetting the bad? Is the bad offsetting the good? Either way, we don't have smooth waters ahead of us one way or the other is what we're looking at.
Yeah. Providing the right prescription given the current backdrop is incredibly difficult. I know you and your team do your best to listen to your clients and to make sure that they hit their goals over long periods of time. I want to throw it back to you. Any other questions for me just while we're in the community cafe at this point?
No, I think I've gone through all my questions. I'm looking at everything. I've gone through it. So we'll end it on that note. Michael, again, first, thank you again for being on this here today. I appreciate you being in our office before coronavirus hit, to the times that you've been in here, not only helping our clients and helping our team, but the constant conversations you've had with my team remotely as well, just keeping safe distance and being smart and safe, but at the same time, just always helping us help our clients. Your knowledge and your input that you and American Century share back to us is huge, and we just can't thank you. And I'm thanking you from not just Mark Robertson, Affinity Asset Management, and all the folks here at Affinity, but I'm really thinking on behalf of a huge clientele base of money that we manage. So we thank you for all your help.
Yeah, I'll send that back to you. And I really want to finish the way I started, and that's just by reiterating the ingenuity and innovation that you're bringing to the marketplace and these educational platforms. It's really cool to see. It's really important for investors to hear. Thank you for including me in this. And then also something I should have said on the onset, we at American Century, and I can probably speak on behalf of Affinity here, hope that those of you who are viewing this, your families are safe, you're safe, and I'm wishing you a prosperous remainder of 2020.
Well, thank you again, Michael. And as a wrap up for everybody that's watching here, if you're watching this on Facebook, go out to our Community Cafe Facebook page. Please click like, that way you can follow us and get our updates. Take this video and click share and share it with all the people in your world and encourage them to share it. So information is ammunition. It helps us with having less stress and anxiety, the more information that we have. So we want to keep everybody educated on these important topics. I want to wish everybody health and safety as well. I've been tested twice because of a couple of potential opportunities that I might have come across somebody, and both times come back negative. So been blessed with that. But I do know people who have tested positive. They've gone through their process. They've come out of it healthy and fine. Scary. Don't wish this on anybody. So I wish everybody health and safety. And I really want to encourage everybody, please go out there and vote. Vote. It's your American privilege. Vote for the way that you believe is the right way to vote. But just get out and vote one way or the other. Me personally, I think I'm going to go vote in person. I don't want to be part of those statistics where there might be a mail-in ballot problem. So if I have to wear a hazmat suit, full mask and gloves and hand sanitizer all over the place, I'm going to do it because I'm going to go out and I'm going to vote, and we'll make sure that my one voice is heard. So thank you everybody for watching the video here today. Michael, again, thank you so much for being a part of it, buddy.
Thank you.
All right. Take care. Have a great rest of your day.